Eric Sprott, Rick Rule, and Keith Neumeier are three successful resource investors coming together for one simple reason: to buy cheap assets from distressed companies and seize this once-in-a-decade opportunity to buy gold, silver, and other mineral projects for pennies on the dollar. First Mining Finance Corp, trading on the TSX Venture under FF, a recently launched venture with the sole purpose to acquire advanced stage natural resource projects, and starting on day one with 18 projects, management has already identified over 60 additional projects to acquire. Learn more about First Mining Finance at futuremoneytrends.com/investright.
I knew this was coming. There were warnings.
Well, they went and did it. Yes, Congress kicked the can again and raised the debt ceiling to near $20 trillion. This limit is enough to last until September 2017, well after Obama has left office. Zero Hedge predicted just this outcome 8 days ago. Congress, minus one bonehead named Boehner, will still have to allocate thousands of budget line items by December 11th deadline when existing spending authority expires for government agencies. This one should be a tougher fight to settle. Remember that Obama stated he will not sign something that is short-term. He wants only long-term can-kicking for the rest of his presidency. Rand Paul summed up the current debate nicely, saying the right's going to get more military money, the left's going to get more welfare money, the secret handshake goes on, and the American public gets stuck with the bill. Also this week we had the Federal Reserve meeting where of course rates were not raised. What was actually increased was their statistic for the likelihood of a December rate hike up to 48% from a previous 34% probability. Again, with long-term experts like Andy Hoffman predicting negative interest rates, we don't see them raising this December either. The US dollar index is back to around 97, with NASDAQ.com reporting it's broken above a key resistance level. GDP numbers released stated a 1.5% annual growth rate, but frankly, we don't buy it. As the Money GPS points out, everything is bad. Student loans are up to their highest. Food stamp usage are up. Federal Reserve debt is up. Money printing is up. Health insurance costs are up. Labor force participation is at its lowest in over 30 years, along with other depression-level statistics. A 76-point crash during the last 10 minutes of trading made Friday a solid down day for stocks, finally showing the real weakness in the markets and fear of a larger crash. Though the Dow has recently made it back to over 17,700, just about 600 points or 3.3% shy of its all-time high from May this year, we'll soon see if Bo Polney was right in our recent interview calling for a November stock market crash. In conspiracies and fear news, many theorists are worried about the new change coming to YouTube. Alphabet, formerly Google, has now launched YouTube Red, which is a paid subscription service meant to host premium content, sort of like Netflix. Theorists are worried that this is just a first step to making all of YouTube go behind a paywall and or eliminating all controversial topics from the once user content haven.
You'll get access to exclusive content that is being produced by YouTube royalty, like PewDiePie, the Fine Brothers, and Tobuscus, and things along that lines, content that you can't get access to any other way. That exclusive content is supposed to be similar to what Netflix offers with their originals. We're talking real money and real budgets producing real content, such as a reality show with PewDiePie being directed by the guy who made The Walking Dead. Now,
by the way, it doesn't matter how big a YouTuber you are. It's actually probably better for small scale YouTubers because it's more likely that small scale YouTuber people will have fans watching YouTube who will subscribe to YouTube Red because they are YouTube power users. They care a lot about YouTube. They spend a lot of time on YouTube. So
Do not think it is a coincidence. We just had the Senate pass a bill which takes away many of the freedoms that we have enjoyed on the internet, all because of the fear of terrorism, right? I haven't even looked at it, and I know that's what they've done. Now we have a congressional subcommittee, or that's what we're going to have, or something approved by them, an appointed group which can decide what content, quote, is dangerous or inciting terror or whatever.
And they incorporate the subscriptions, the paid subscriptions, into the same domain name, into the same path that YouTube's in. They're planning to incorporate YouTube Red into the entirety of YouTube, which means, as I stated earlier, over a long period of time, maybe it's 6 months, maybe it's a year, maybe it's 2 years, YouTube.com, the free YouTube, will be completely done away with. They don't need it anymore. By that time, a lot of the people who put out their content will be gone completely.
YouTube is touting the service as an ad-free alternative to the current ad-sponsored user-created content that currently exists. If positive, this could be a better replacement for the current off-site hosted Patreon service, which allows content consumers to pay their favorite creators to produce videos without the help of YouTube ad revenue. This could also pave the way for a high-budget YouTube original series. As you may or may not know, Amazon already has jumped onto this, producing original series just like Netflix. This information is especially important if you've built a following and have a platform tied to YouTube. This could mean major changes for users. Gold and silver broke their 200-day moving average, although falling after that. Gold spiked to $1,180 and has crashed to $1,140 since. Silver rose to $16.30, then crashed to $15.50. Oil prices are flat from 2 weeks ago. The S&P Credit Rating Agency actually lowered Saudi Arabia's creditworthiness score to AA negative, citing lower for longer depressed crude prices and their increasing fiscal deficit as concerns. They're looking at the first fiscal deficit in years that's about 20% of their GDP. Bitcoin rose to a new year-to-date high, Thursday at over $315 per coin. By Friday, the price shot up a further 5% to $330. The price seemed to begin picking up in Chinese trading with volume at over $1 billion, traded within 24 hours. We think that the debt ceiling debate in the US had something to do with this price spike. The Bitcoin Investment Trust symbol GBTC surged 18% up just since Wednesday to a high of $33.90 on Friday, on par with Bitcoin spot price now as we predicted. It looks like growth has explicitly returned to the cryptocurrency sector with more companies jumping in, and number two, currency Litecoin finally rebounded to $4, up 28% for the week. Just published by the U.S. Patent and Trademark Office are 2 patents that eBay filed last year relating to cryptocurrencies. The filings show that the first patent is for a distributed cryptocurrency unauthorized transfer monitoring system, while the second is for a distributed cryptocurrency reputation system. This weekend we have 2 interesting interviews discussing the potential for World War III and a good economic summary with our friend Andy Hoffman, which should be released Sunday. Subscribe free at crushthestreet.com and wait for the interviews to be emailed right to your inbox.